Hello ladies and gentlemen, welcome back to the channel. Today we are going to be looking at the long-awaited Roth IRA account that I have made on my Charles Schwab investing platform, if you will. If you guys are veterans to the channel, you guys know I opened this Roth IRA up several months ago, but I hadn't really found any good mutual funds or ETFs to invest in. But I believe I have finally found 4 good mutual funds to invest in on the Schwab platform. So stay tuned for that. If you guys haven't already, go ahead and smash the like button and hit subscribe, and go check out 2 videos that I posted yesterday. They will do a great job of explaining what my thoughts are on the current situation in the stock market and the stocks I am currently buying in the stock market. So without further ado, let's get right into it. So let's go right into the Roth IRA. As you guys see, the 4 mutual funds I have are SWISX, which is Schwab's International Index Fund, SWPPX, which is the S&P 500 Schwab Mirroring Index Fund. Ignore the ESPN ticker. SWSSX, which is Schwab Small Cap Index Fund, and SWMCX, which is Schwab US Mid Cap Index Funds. And we're going to get into those in just a second. And the biggest reason why I chose to invest in these 4 was the fact that, here, let's just click on the S&P 500 Index Fund real quick, is the fact that the minimum investment for mutual funds normally is about $1,000 to $3,000. If we scroll down here to find the minimum investment on this mutual fund, on this left-hand side, if you take a look, the minimum investment for a basic IRA and a custodial account are $1. And you may be like, well, how is that possible? You know, it's $45 a share of this mutual fund. All you have to do is put in at least $1 and $1 subsequently each time you invest, and you can own part of this index fund. It's kind of like the fractional shares idea that Schwab announced, and they haven't yet implemented, to my knowledge. And this is a great thing for people like me who don't have $1,000 sitting around, who don't have $3,000 sitting around. That to just put into one mutual fund. And then you've got to diversify by getting, 3 like I did, or 4 or 5 more mutual funds to put your money in. And it also saves you the hassle of potentially buying an ETF. Some ETFs are $300 a share, if you will, or just per the ETF. Some people don't have even that $300 sitting around to buy one quote unquote share of that ETF. So this is an amazing thing that I have slowly discovered. It took me a long time to find one of these, but it is an amazing thing for young investors and investors who don't necessarily have a lot of money to put into the Roth IRA, but they know the power of compound interest and want to get their IRA opened as soon as possible to make as much money as soon as possible and grow it tax-free, which is the beauty of an IRA. If you guys don't entirely know what an IRA is, let me know and I'll make another video on it and in the near future. So let me know in the comment section below. Another beautiful thing about this index fund is the fact, look at the expense ratio on it, 0.02. That's another beautiful thing. An expense ratio is essentially, I believe it's either quarterly or yearly or semi-annually. This will be taken out of your account. It's an expense ratio for keeping the fund running. All mutual funds have these. It's just part of owning a mutual fund and part of getting that extra diversification. So they're going to take 0.02% out of what you own in the mutual fund. So it's going to be very minimal. Some mutual funds are 0.0 or 0.1 or 0.2. This one's 0.02. So just a very minuscule thing. Then you scroll further. What I like about Schwab is first of all, all 4 of these mutual funds are to Schwab in specific. So if you're not currently on Schwab, Fidelity has these. I believe E-Trade may have these, and potentially, what's the other one? TD Ameritrade. I think all 3 of those also have these if you look hard enough. It wasn't too hard to find for Schwab. I essentially just typed in Schwab $1 minimum mutual funds. You should be able to find some of these, and it shows performance against other mutual funds, as you guys see right here in this chart. So hypothetically, from year to date, or you can go to 10 years. Let's go to 10 years. So hypothetically, if you invested $10,000 into this mutual fund, you would have $30,812 versus just another if you just did a large blend, you'd have 25,000. Ignore that. That's my video that I posted yesterday. So as you guys see, the performance stacks up very well versus other mutual funds. And if you look, total assets of $40.3 billion, a lot of diversification here, total holdings of 509. So it mirrors the S&P 500 plus another couple stocks, which, more diversification, the better. The manager tenure has been here since 2013, pardon me. And the inception date of this mutual fund was 1997. So 1 year to date is 31.4%, because if you guys know, the market was crazy last year and in a much different way than what it is currently. It was a lot of growth, but obviously this current year, 2020, is weighing that down quite a bit. 5 years, 11.6, 10 years, 13.5, and since its inception, 8.1%, which is essentially exactly what the market has done, since it is just mirroring the S&P 500. So let's go back to this. Next, we'll take a look at the International Index Fund, and at the very end, we'll explain why I picked all four of these mutual funds to invest in. So here we have Schwab International Index Fund, SWISX. So if you look again, year to date, not very good. If you would have invested in this mutual fund 10 years ago with $10,000, you would have $15,233.33 versus another foreign large blend. You would have a little bit more theoretically, or I guess that's not theoretically, that is proven. And you guys may be thinking, well, why would I want to invest in this if the growth's not as good? We just took a look at the S&P 500 mutual fund, and the growth was closer to 31% over the year versus this, which was 21%. Why would you want to do this? This is purely a diversification play on my part, and I will get more into that in just a second later on in this video. So as you guys see, 1 year 21.9%, 5 year 5.8%, 10 year 5.5%, and since its inception 4.5%. And again, that's not great. You're not beating the market with that, but you're not putting all your eggs into one basket, into the United States stock market. You have more of the international view of things. So say the United States has a recession, yes, that's going to affect everybody, but it's going to hit the United States the hardest. So you may have a little bit more stability brought to you from the international market. A little bit higher gross expense ratio of 0.06%, still not very high. $5.3 billion in total assets, 937 total holdings. And the manager has been tenured since 2017, and the inception was 1997. And again, $1 minimums. Wonderful. The next one we have is SWSSX, which is their small cap mutual fund. Let's go into this real quick. So let's take a look. These are probably going to be your high growth, but also more risky. As you guys see, they would be down. If you invested $10,000 at the beginning of this year, you would only have $8,866. So let's go to the 10 year on it. If you had invested $10,000 10 years ago in the small cap mutual fund, you would have $25,261.73. So let's go down to the 1 year would be 25%, the 5 year is 8.3, the 10 year is 12.1, and since its inception is 8.8. As you guys would notice, if you saw the number earlier, the S&P 500 mutual fund had 8.1% since its inception, and this one has 8.8. So as you guys see, a little bit more aggressive, a little bit more potential for growth to be there. 0.04 gross expense ratio, 3.9 in total assets, total holdings of about 2,000. Manager's been tenured since 2013, and its inception was 1997. And again, $1 minimum investments. Last but not least, we have SWMCX, which is their mid-cap mutual funds. So as you guys see, $10,000 investments 10 years ago would have been or would be if you invested $10,000 10 years ago, $10,732.75. Since its inception, it's earned about 8.9%. And the fact of the matter is, since that is so low, it didn't exist 10 years ago. This inception date was in 2017, and the manager has been tenured since 2017. The total assets in this fund are 455 million, so much smaller. Gross expense ratio of 0.04%, and the manager again has been tenured since 2017. $1 minimums. So those are the 4 mutual funds I own in this Roth IRA. As you guys see, I have 1.5 I guess shares of the international one, 0.623 of the S&P 500, 1 share of small cap, and 0.68 of the mid cap. I'm down a little bit just because of the fact that I literally put in my first $40 to $60 into this when the market was at like 30,000. So when it was at super high numbers, and then it just fell off a cliff. So I put it in at the exact wrong time. But again, I'm in the game for 30 to 40 to 50 years. So I'm not worried about it at all. And the beauty of this is I'm not making that much paycheck to paycheck since I am currently a student. The beauty of this is every time I get a paycheck, I deposit $20 into this account. So every 2 weeks I put $20 into this account, which isn't that much, and then I throw $5 into each one of these. Since it's $1 minimum, I throw 5, so it's divided up evenly, 25, 25, 25, 25. I may have added one extra 25, but 425. So each one has a quarter. And when I was in economics class, one of my professors said one of the best diverse portfolios for an IRA would be, you want that 25% international, 25% of the large cap, which is the S&P 500, and 25% of the small cap, and then along with that 25% mid cap. So that's exactly what I've done. It should return me about 8% every year, which is exactly what the market does, which in a Roth IRA, you're not necessarily trying to do individual stock trading unless you feel comfortable with that. Me personally, I do not. So that's going to do it for my Roth IRA video. If you want me to go into more depth on any of these mutual funds or anything more about a Roth IRA, feel free to leave a comment in the comment section below. Again, smash that like button and hit the subscribe button as well, and we'll continue to grow in our education, and hopefully this channel blows up and I can continue helping you guys in every way possible. And like I said, that's going to do it for this video, guys. Until next time, happy investing.